the poll verdict has come. It's going to be a coalition government at the center. After 10 years, we are going to see a coalition government. So we can say that this poll verdict is neither a decisive mandate nor a fractured mandate. Previously in 1990s, we have seen so many elections with fractured mandate. And then we had a coalition government in 1999 by Vajpayee. Then 2004, again we had a coalition government. 2009, again a coalition government. Then from that, from 2014 to 24, we had a single party majority government. Now we are going to have a coalition government. But number of seats got by the largest party, 240, is a decent seat. So we don't expect any hiccups in running the government, because when you see 1990s, when Vajpayee run his government for 13 months, there were two parties supporting that, Jayalalitha and the other one Mamata Banerjee. Both parties were giving sleepless nights to Vajpayee. Daily they will be putting some condition, threatening them to withdrawing support. Like that, Vajpayee was running that government. When compared to that, it's far better now, and we expect that there will be smooth running of government for the next 5 years. And the market was expecting that, like last time, the poll verdict will be there, BJP getting around 300 and NDA getting around 350. Like that, the expectation was there. So some disappointment was there on the poll outcome. But if you see, means both sides, India bloc and NDA, both were disappointed. India bloc wanted that Modi should not become PM for the third term, but he has come again, so they were disappointed. NDA wanted 350 seats with BJP getting full majority. They did not got that. So the disappointment was there on the both major alliances, both NDA and India bloc. But one important thing which surprised me also was the retail investor conviction was rock steady. So on the day of the poll counting day, almost foreign institutions sold around 12,500 crores. Sensex on the day fell 6,000 points. On day low, it was minus 6,000. Nifty around 2,000 points it fell. In spite of sharp fall, in spite of heavy selling by for both domestic institutions also on that day sold around 3,500 crores. Historically, if you see, whenever FII sell, DII used to buy. But on the poll election verdict day, both FII sold, DII sold. But retail investors bought hurriedly, and they are the one which bought on that day. I heard that around 20,000 crores worth of shares was bought by retail investors alone on that day. 16,000 crores net sold by institutions, both the DII and FII combined together. So the conviction on retail investors is rock steady. Similarly, mutual fund also got huge inflow on the election day. When the market fell very sharply, most of them transferred money to mutual fund to buy that units. There was some problem came. Many investors got units on the next day NAV, not instead of Tuesday's NAV. Some of them even they, after transferring money on time, they got it on the Wednesday's NAV. Some issue was also there on that day because of such a huge inflow mutual fund got on that day. So the retail investor conviction is rock steady, which will definitely help market to avoid volatility in future also. And if you leave aside poll verdict, there are plenty of positive macro news. First, the monsoon is going to be good, and government is going to get more than 1 lakh crore surplus money from the RBI, extra money from the RBI when compared to last year. The fiscal deficit was lower than projected. Then Standard and Poor, they have changed their rating outlook to positive. Like that, many macro positives are happened in the last 1 month, which will get reflected in the coming months in the market. And the other important thing is that the US market, last 2-3 years, what we are hearing was that US will go into recession, and people, it will get impacted globally. Like that, we were hearing it. But if you see, even yesterday and day before yesterday, Nasdaq has hit all-time high. S&P 500 was at all-time high. So the stock market is not expecting any recession in US in time being. So overall, Nifty and Sensex up by 5.5% and mid and small cap by around 7%. It has gone up in the last 1 month. And this is the election mandate 2024. So the largest party BJP they got 240. So last time they got around 302. If you see before coalition government, most of the party seats were much lesser than this. All the government completed their 5-year term. If you see in 2004, Congress got around 145 seats, one more UPA 1. In UPA 2, around 202 seats Congress has got it. So this is much higher than now 240 seats by BJP. Similarly, in 1999, NDA, when Vajpayee led government, they had around 185 number of seats at that time. That also they have completed 5-year term. So my expectation is that they will smoothly complete the 5-year term because they had the required number of seats. So with 240 seats plus Telugu Desam 16, then Janata Dal 2, then another ally is there with the TDP. He is having 2 more seats, and with Shiva Sena SHS 7 seats. So with all these parties, they can conveniently run the government for the next 5 years. And overall NDA is 293. But some of them are saying that some independents were ready to support them. So the count is now has become 303. Even with 293, they can comfortably run the government. My own take is that Chandrababu Naidu will not threaten based on his body language in the last 2 days. If you see, means he won't do any problem to the government, at least for the next 1 to 2 years. That's what I feel from his own body language. He is a very seasoned politician. And even during the Vajpayee government also, he did not did any problem to neither he threatened nor he made some other issues with the government. So now we are going to have a coalition government after 10 years gap. And my feeling is that this NDA 3, till one day before election, Modi ji was telling BJP. Exactly on the day of election, he just changed the word from BJP to NDA. Previously Modi 3 they were telling it, now they have shifted to NDA 3. NDA 3, my feeling is that they will focus completely on the economic policies. Previously BJP had some ideology issues also where they were trying to implement and there were 3 or 4 important bills which were ready to get passed in the parliament, but because of not getting the majority they will keep that aside and they will entirely now focus on the economic policies. And big market participants, like big foreign institutions and big investors, they may wait for government action. What is going to happen in the next 1 week, 10 days or 15 days, 1 month, or even budget which will likely to come on July 1st or 2nd week. They may wait for it and they may take some steps whether to buy or not. But the problem with the market is that if you want to buy only after everything to be certain, or if you want to sell after everything to be certain, means either you have to buy 20-30% higher than the current market price, or you have to sell at the 20-30% lower than the market price. So some risk has to be taken that this will happen. Some forecast we have to make ourselves, and then we have to buy before the event. Then only we could able to buy at the lower rate or sell at the higher rate. If we wait for we will see what are the policies they are going to announce, means market stock price would have gone up by 15, 20, 30%, then we will buy only at the peak. My expectation is that big foreign investors who are underweight in India, they may wait because they are waiting for more than 1 to 2 years. They may wait for another 1 month, but by that time most of the stock prices would have gone up. Market reaction, if you see, means election results got discounted on the day of counting. Almost Nifty fell near to 10%. It did not touch the circuit filter, but around 9% it fell. Then from there it bounced back and covered some losses, and election results got discounted. Now this new government action will guide market movement. See, already we are hearing from sources that our 100-day agenda is kept ready by the government even before the elections, and most probably by tomorrow evening the swearing in ceremony will happen. From Monday onwards, almost on a daily basis we may start getting some announcements by the government related to infrastructure, railways, defense, court sectors. We may start getting it on a daily basis by individual ministry. So that will guide the market movement in coming days. Retail investors not panicked, as I told before. And multiple macro positive news. I said no, the fiscal deficit is lower, monsoon is good. That we will see one by one in detail in coming slides. And near-term trigger is the 100 days plan, government plan, 100 days plan, the agenda they are having on economic affairs, they are having it. That likely to come from next week onwards. And union budget will be scheduled July first week or second week, it will be scheduled. That also will be a big trigger for the market in the near term. So new government, what they are going to do, immediately without delay, they are going to announce this 100-day plan and they will start implementing it. That's what my expectation is. And a crucial announcement related to infra, defense, housing, renewable energy, manufacturing expected. All this will happen within 2-3 months, everything will happen. And PSU divestment, now the government is sitting on a very huge valuations on many PSUs. They may try to monetize it and PSU divestment will be speeded up. And in budget, next month budget, there is already a big talk that many middle class were unsatisfied with the government because of high GST collections and high income tax paid by the middle class families. And most probably there is a possibility of some tax rationalization happening in the union budget. GST will not come in union budget because it is taken by state and center together. That may be announced by the GST council. Whereas the direct tax, there is a possibility of some slab increase like that may be happening in the union budget next month. And this is the chart done by the City Research, foreign institution. And if you see that the likely policy agenda for the next NDA government. So more likely this infrastructure spending, digital India push, skill development, defense manufacturing, urban housing infra, green energy, all this is likely to happen more in the coming days, and more priority will be given to this thing, and the impact on the economy also very high. So which is less likely if you see some of the BJP's own ideology agendas like one nation, one election, population control bill, uniform civil code. These are less likely, at least for the next 1 to 2 years, these are less likely, and the impact on the economy also very less, these things. So this is what city is expecting. The more important thing which have huge impact on the economy, that will be more likely to happen. And another important priority for the government is that this FDI last year has come down drastically, and most probably the FDI in electronics and other crucial things government may try to bring in, so that the overall net FDI they will try to increase higher. PSU divestment, if you see, for the last many years, every time in budget they will tell one figure. This blue is the budget estimated, the light orange, this is the actual one. It is always lower for many years. If you see from 2011-12, if you see, it is less than a budget. Only 2 years it came higher in 2017-18 and 18-19. That too mainly because of selling HPCL to ONGC, then REC to PFC. Previously REC was owned by the government. They sold it to another PSU, which is the PFC. So REC was sold to PFC. That is why these 2 years alone they managed to show higher than the budgeted because of the intersale among PSUs. But after that, every year they will forecast a big revenue from the PSU divestment, but nothing will happen. Even last year also it is lower than forecasted. Next year they have forecasted 50,000 crores, but my expectation is that it will be much higher, around 75-80,000 crores government may get it. Institutional activity, FIIs were most of the days they were selling for the last many months. If you see, this is the 4th, is a big sell figure. This is during on the June 4th, on the counting day. They sold a big amount, 12,500 crores. 5th they sold heavily. 6th also they sold. Only yesterday the buying was there. Around yesterday buying was there, that I did not put in. But domestic institution, they were mainly buyers. Suppose if FIIs get confidence means most probably they will come in a big way in our market. On domestic macro news, if you see, the GDP data was much higher than expected. It came to 8.2%. Previous year was 7.0. Before that 9.7. It is mainly due to low base effect. So 8% above growth is a big one, because if you see globally, not many countries were growing at this rate. If you see historically, there's above 8% growth in from 1960, 60, 61. If you see that, only 9 times India has shown growth of more than 8%. In that mostly come after 2000 only. Between 1960 to 2000, if you see that, only 3 times India could able to grow more than 8%, and after that around 6 times India has managed to show growth above 8% in a single year. So last year was 8.2% growth. Fiscal deficit also lower than expected, 5.6%. In budget they have put in 5.8%. So that has been reduced to 5.6%, and for next year it is expected to be 5.1%. But because of huge amount they are getting from RBI, maybe the fiscal deficit may fall below 5% for current financial year. And this is the historical fiscal deficit chart. And if you see the chart, this is the government taking debt to bridge the fiscal deficit. So for current financial year, government has took around 17 lakh crore debt, because the fiscal deficit was 17 lakh crore. Before that it was 15 lakh crore. And if you see this one, FY 11 to 16, fiscal deficit in terms of GDP fell very sharply, because government actual fiscal deficit was flat. So fiscal deficit, if it remains flat, means naturally in terms of GDP it will start falling. Most probably this will be the peak debt government is taking now. From here on, either it will stay flat or it will marginally come down. If that is the case, then naturally the fiscal deficit will start coming down. The dividend, as I told previously, the government to get around 2.1 lakh crore dividend from RBI. This is almost 140% higher than FY 23 when compared to previous year. So this extra money they are getting, it will be used to reduce fiscal deficit, or can be used for capex plan or welfare schemes. The government may use it. 1.1 lakh crore, more than 1 lakh crore is not a small amount, and they may use it for multiple purposes. This is the historical trend. So the current year they are going to get 2.1 lakh crore. Last year just 90,000 crores they have got it. Previously 30,000 crores. And the highest amount they got previously was 2018-19, 1.8 lakh crore. Before that all small amount, only 20,000 crore, 30,000 crore, 70,000 crore, 50,000 crore, like that they have got it. So 2.1 lakh crore is a big amount, and it will be used for multiple purposes. The other big positive came was the sovereign rating outlook, which was revised to positive. Previously in 2010, if you see, the rating agency revised the outlook from negative to stable. From after 14 years they have changed the outlook from a stable to positive. So a rating always have two components. One is the actual rating, the second one is the outlook. Triple B minus is the lowest investment grade rating. Before that the rating will happen to uninvestment grade. So India is having the lowest investment rating as of now. But the outlook what it used to say is that next what they are going to do it. That's what outlook will tell. And now they have revised to positive, means most probably the rating upgrade may come by one or next year or another one more year, the rating upgrade will come. That's what it indicates. Outlook positive means most probably from triple B minus, India rating may be revised positive to triple B. Upgrade will happen. So some of the reason why they have revised the outlook is that is the reason S&P has given. Robust economic expansion. India has a very good economic expansion is there. The quality of government spending is very good. It's very important. because the government spending on infrastructure and capital capex plan is very high. For that fiscal deficit is happening means it's good. So that's what they are telling. Quality of government spending has improved. Then the fiscal consolidation is happening. Then monetary policy, credible monetary policy regime is there. Monetary policy, generally it is done by RBI only. Then broad continuity in economic reforms and fiscal policy. So that is the reason they are telling for changing the outlook. My expectation is that by next within 1 year, most probably rating upgrade will happen, because the fiscal deficit is going to come down very sharply in current year. The next positive is the monsoon. The IMD, which is the Indian Meteorological Department, government owned, they are expecting 106% of rainfall, long period average, and monsoon has arrived on time. Though in Kerala, in the month of May, we had a very good rainfall. Pre-monsoon rainfall was excess in Kerala, but from June 1st onwards, it is slightly lower. But we expect that monsoon overall it's going to be very good throughout India. That's what IMD expects. And another SkyMet, which is the private forecast agency, they are also saying the same thing, that monsoon is going to be very good. But instead of 106, they are expecting 102% of long period average they are expecting. And result season is over, and if you see that which segment of the market has where the results are very good means it's Nifty 50 companies, that is the large cap companies, the results were good. Profit has gone up much more than the mid and small cap. If you see revenue, on an average almost 6% revenue growth is there for Nifty 50, which is the large cap company. Nifty next 50, then mid cap 150, small cap 250 companies. Almost on an average 6% growth is there for each index companies. Whereas profit, if you see that Nifty 50, the profit growth is 12%, Nifty next 50 is 8%, which is also almost near large cap category companies, 8% growth is there. Whereas mid cap and small cap, the profit growth is around 5 to 6% only. So the overall, the large cap companies has done well in this quarterly results. It's also an important chart, equity returns country wise. So somebody comes to investing in equity markets, the expectation is what? Equity market, how much return it can give? Can anybody say it? What's the expectation? Suppose a retired person comes into market. If he put money in bank deposit, he may get around 7 to 8%. Some other fixed deposit in private companies, around 8 to 9% he can get. Suppose if he comes to equity market, what will be the return? Over a period of time, not for 1 year or 2 years, for 5 years, 10 years, 25% miss, then you will get disappointed, sir. Around 15% is a return one can expect, because generally equity markets, they grow in line with the GDP only, GDP plus inflation. So that is the return we used to get it. GDP, if it grows around 8%, inflation is 6%, means 14% overall return. So 14 to 50%, 15% one can expect in equity markets on a long term basis, 10 years, 15-year basis. Just it will exactly mimic the returns. See, in Sensex, it has given around 16% return. Since 1979, it has given return. 16% return it has given. If you see the profit growth of Sensex companies, it will be exactly near to that only for the last so many years since the Sensex has come. So mostly equities will move on a long term. It will move in line with the profit growth of a company, and we will get around 14 to 15% return, which is a reality expectation. But expecting 25-30% in equities, it will not work out for long term. And if you see the country wise return, India, if you see that, here it is. For last 30 years, that 10% return it has given. Real return means after adjusting for the inflation. Suppose if you are putting in a bank deposit 7.5% means the real return is actually 1% only, because if you adjust for inflation, only 1% return only you will get. Whereas in equity, you would get 3-4% higher. In India, 4% is there. Whereas in if you invest on an SIP model, it is 6% return is there. The other country which has given good return over a long period of time is the US. Almost a 6% return it has given for in the last 30 years. All other country, if you see that the returns were much lower only. Some countries the return will be higher, but the real return will be lower because the inflation is much higher there. So the adjusted for inflation, India is reasonably has done well if you compare with other global markets. China and all, if you see, means the return will be far lower in the last 30 years. So one should come into equity market with the expectation that we will get around a 15% return. If you get higher means it's happier, but expecting 25%, 30% return and actual were 15 means you may get disappointed. This is the global central bank rate cut expectation, and January 1st everyone expected that Fed will cut by 150 basis point, but now the actual expectation is 25 basis point only they will cut this year. ECB, European Central Bank, in January, the expectation at the beginning of calendar year 2021 in January was 150 basis point, whereas now it has been reduced to 50 basis point expectation on June 3rd, that is a few days back. So the rate cut expectation at the beginning of year did not happen. In that yesterday, day before yesterday, 25 basis point ECB has already cut. So only one country where instead of rate cut, rate hike is going to happen is the Japan. Previously they were expecting only 20 basis point rate hike will happen, whereas now they are expecting 50 basis point hike because the inflation is much higher. We have to see how much RBI is going to cut. My own expectation is maximum 25 basis point or 50 basis point RBI will cut rate in current year. Data to watch, the new government, tomorrow swearing ceremony is there. So Monday onwards what they are going to do. So within 1 month we will come to know what are their priorities and how that government will run. That we will come to know within 1 month. By budget itself we will come to know. So that will be very important for market movement. Then the monsoon progress, how monsoon is going to perform. Okay, thank you.